Welcome and thank you for joining today's conference, Department of Market Monitoring Extended Day Ahead Market Metrics. Before we begin, please ensure you have opened the chat panel to view any links or messages by using the associated icon located at the bottom of your screen. You can submit questions throughout the presentation to all panelists from the drop-down menu in the chat panel. Enter your question in the message box provided and send. For audio questions, all audio lines have been muted until the Q&A portion of the call. To indicate you want to ask a question verbally on web, click the raise hand in the center of your screen. You will hear a beep tone when you are unmuted. At that time, please state your name, question, and affiliation. If you require any technical assistance, please send a chat to the Inteller Events producer. With that, I'll turn the call over to Ryan Kurlinski. Please go ahead.
Okay, hello everybody. Thanks for joining. Ryan Kurlinski, a manager in the Department of Market Monitoring. Also here on the speaker panel, we have Eric Hildebrandt, the Executive Director for the Department of Market Monitoring, and Adam Swadley, another manager in the Department of Market Monitoring. So today to go through this, I'm going to do an introduction to why we posted our this extended day ahead market metrics catalog. And then, so most of the meeting is going to be me essentially kind of reading through the metrics. And so, I'll try to add a little color where it may be appropriate. And I'll stop for questions periodically. So I'll stop kind of after the introduction, to what the point was of posting these metrics and having this call. And then I'll stop kind of discrete times kind of throughout, which may be a natural breaking point as you get through some of these metrics. So feel free to raise your hand whenever, and then we'll try to kind of have some different spots where we stop to chat about metrics. All right, get to the intro slide. All right, so what we posted was it's a draft put together by lots of people within the Department of Market Monitoring, and these are the metrics that we plan to make for internal monitoring and also for public reporting. And the point of posting that is to solicit feedback from stakeholders. So we're hoping that if you have feedback for us on our metric catalog, that you'll email it to dmm@kaiso.com and put the subject line EDAM metrics comments. Anything that anyone submits to us, we'll take into consideration as we kind of think through, what are the metrics that we should be doing for monitoring and would be most useful for you all for us to publish publicly. So in particular, the kind of feedback we're looking for that we think may be particularly useful would be, and you all going over our draft metrics here. If you see any issues that you think would be important for DMM to be looking at, monitoring or publishing publicly, which don't seem to be covered by our draft list here, that'd be very helpful. And then also, so everything on all of the metrics in our draft catalog list here, we're not going to be publishing all of these publicly. Some of them are going to be a lot of the stuff we look at, right, has confidential information, so obviously won't be putting those in any public reports. But also, currently we have hundreds of metrics, right, for the existing market that we look at internally, right, that we don't publish. We do have to kind of use our discretion with respect to which of the issues that we monitor and which of the charts and ways of looking at things that we look at, which of those we actually put in public reports. So it'd also be useful if sent us an email if you have particular metrics or ways of looking at some of these issues that you think would be particularly useful for us to put in a public report. Okay, so before I stop for questions on that, I'm going to jump here to the way we organized this. So the metrics are sorted. So we have under ID, first we sorted them by whether or not they're day ahead market enhancements metrics. So we have 15 of those. And then we have EDAM metrics. So the ID for the day ahead market enhancements ones start with a D and then a number. The EDAM one starts with an E and a number. Then we sorted them by product or area. All the day market enhancements ones are the same, have the same product area. And then we tried to but the EDAM ones had some, if you look through that, and you'll see on this presentation today, the EDAM metrics have some different product areas. And we further then try to subdivide the metrics into more of a description in terms of what, more of a subdivided area that gets a little more detail about what the metric may be related to. And then after that, then the metrics itself within those metric type, we just sorted by alphabetically. So, don't read into the order of the metrics within each metric type. Again, it's just alphabetical. And so, as I talk through it, some of the more general ones, higher level metrics are not listed first. So just take that into consideration as you kind of go through these. They're not really in any particular order after subgrouped, subdivided by a metric type. Okay, so from here, so the plan for this call is literally to kind of read through these and maybe add a little bit of color for each of these. But with that, before I do that, let me stop for any questions. If anyone has any questions about the purpose or, communicating feedback on this. So Ahmed, if you can open up for any questions that anyone may have before I start going through the 55 metrics or so.
Well, as a reminder, to ask a verbal question, you can navigate to the bottom of your screen and press the raise hand icon. You'll hear a beep tone when you're unmuted. At that time, state your name, question, and affiliation. You can also submit questions throughout in the chat panel. Okay, we do have one question.
UC NH Division, can you hear me?
Yeah, hey.
Hi.
Jordan. Yeah, hey.
Hey, yeah. Can you guys identify, maybe follow up and post which ones are going to be confidential and which ones will be publicly available? Because there's a lot of metrics posted, but it's hard to weigh in when I know some of them won't be available to us. And we're trying to figure out which ones will be available and which ones won't be.
Yes.
Thank
In
you.
general on here, a lot of the ones that say market behavior, metric type, there we go. So metric type market behavior. A lot of those would be ones we wouldn't make public. Some of them, like bidding stuff, we may be able to compile, like group up into aggregate type of bids if that's of interest. So so actually, but even the ones that say market behavior, a lot of those, again, we could potentially, roll up into forms that would not reveal confidential information, right? Such as, kind of aggregate bidding groups.
Yeah,
but yeah,
so much.
Yeah. I think that's basically. I think that's most of the other ones. We think we could potentially, right, post publicly.
Okay, great. Thank you.
Yep. Great question. Thank you.
Okay, we have another question. Caller, you're unmuted.
Hey, Ryan, it's Dan Williams from the Energy Authority. I'm not sure if you covered this, but DMM has done sort of special reporting as each of the EIM entities have gone live to kind of talk about any of the, if I'm remembering correctly, it is a Monday, to talk about the like transitionary pricing and any time that that's being applied within the EIM entity areas. Is that something that DMM will be doing separately at EDAM Go Live for the non-CAISO areas as well? Just specifically looking at some of the like transition impacts there.
Okay, that's a good question. We haven't talked about doing a special report on each area outside of, say, our quarterly reports. I expect.
Just trying to remember, was that a like requirement of EIM Go Live from FERC that you did sort of special reports for each new area as they came on?
That's a very good question. I was not on this side of the house for those, for those situations, when new areas came on. If I'm calling correctly, I think it may have been. I think it may have been that FERC asked us to do that. So that's a good question. I mean, we can I can take that off as a sidebar and look at, what was the motivation for doing those special reports if that was a requirement from FERC.
I thought it was coming out of the transitionary pricing requirements. So like when there's a power balance constraint violation within one of the areas, that there's kind of some special reporting on the impact of it. But yeah, I'm feeling a little fuzzy right now myself on that. So I wasn't sure if that was something that you all had talked about doing. So maybe that's just some follow up, and I'll ask a written comment so it gives something to respond to.
Absolutely, yeah, and please put that in writing. Yeah, and especially this particular metrics you think you'd like to see, related to specific specific balancing area metrics that may be useful to see, how they transition as as new areas come in one by one. Yeah, but I guess for that, when EDAM first goes live, right, we're just going to have PacifiCorp. So I guess this would be most relevant then for when the second entity joins right in the fall, to potentially break out metrics on just that balancing area and the impact of that balancing area joining. Is that what you're kind of getting at?
Yeah, it was mostly a curiosity that I remember some special reporting happening as each of the EIM entities came on, and just wasn't sure if that was something that was already kind of baked into the plan for EDAM, and then just the transitionary, anything special around the transitionary pricing. But I'll do a little bit more research. It just was just curious if that would jog anything, but we can follow up on it in the future.
Good question. Thanks. I'll also do some research on that as well. Thank you. All right, and I see a question. Is the presentation posted yet on the chat? No, but the content I pretty much just copy and pasted on these slides the language from the metrics posted in the metric catalog that we posted publicly. I did a little bit of editing on maybe one or two things, which we'll do might do one quick reposting of these metrics. In particular, actually, as I get on with this, the numbering for the first day-ahead market enhancements metrics, we had 2 D1s. So to not mess up the numbering of all the rest of them, I'm just converting the first one to D0, and we'll repost it with that. Okay. Any other questions before I start going through these metrics?
There are currently no more questions.
Okay. All right. Yeah, so I'll stop after maybe some natural breaking points here. If people have maybe clarifying questions. Again, I think what would be most valuable would be for people to have their comments on to have a lot of their comments submitted in writing. And so maybe for this call, it might be most useful to kind of keep the questions to clarifying questions. But we'll see how time goes here. All right. So starting off here with 15 metrics on day-ahead market enhancements. With a few slides on that. Several of them, as you see on this page, related to available capacity. So we're looking at quantifying energy and rampable capacity from any units that have any day-ahead market award, and this would be this metric is quantifying the day-ahead market awards. Right, we'll break it out by whether it's energy award, imbalance reserve up award, reliability capacity award, or if the capacity on a resource that has any day-ahead award has, to what extent some of that has no award. And we'll look at the amount of capacity in excess of the energy award that the resource can ramp up to within different timeframes. D1 will be estimating the impact of not enforcing constraints in the imbalanced reserve product deployment scenario, the impact of that on allowing imbalanced reserve product awards that are ultimately end up being infeasible in real time. We'll try to identify the constraints that were not enforced in the imbalanced reserve product deployment scenario that ultimately end up binding in real time. And we'll try to estimate the undispatched imbalanced reserve product flow on those constraints. D2 will be making charts that quantify the imbalanced reserve product capacity that was available in excess of what the day-ahead market procured. And we'll break that out into when the imbalanced reserve product requirement was relaxed and when it's not relaxed, right? So then when right? So it's, again, the inbound reserve product requirement, that's just the end of the demand curve. So essentially when the full 97.5th percentile uncertainty is not procured, we'll kind of look at separating out excess capacity when that happens or versus when the full requirement is procured. D3, try to quantify, we'll be doing charts to quantify the imbalance reserve product that was upstream of a real-time binding constraint, but that was not dispatched in real time. I think that would get at capacity that may have been procured, but which ultimately wasn't able to be delivered in real time because of a real-time binding constraint. D4. Upstream. Yes, upstream. So, when you look, for resources, I call a resource being upstream of a constraint if an injection at that resource node creates additional flow on the constraint. So the shift factor is positive for people who are familiar with shift factors. I call a resource downstream of a constraint if an injection, a resource injecting at that node would produce counterflow and reduce the flow on the constraint. Good question. All right, D4. We'll be looking at, okay, so now this is kind of the corollary to D0. For D0, we're going to look at the day-ahead market awards for resources. D4 is the real-time availability, the actual real-time availability of the capacity from resources that had any day-ahead market award. We'll compare that to the type and quantity of the day-ahead market award, right? Whether it's energy, imbalance reserve, reliability capacity, or no award. We'll break that out by resource type, and in particular, variable energy resources and batteries. And we'll break out the battery unavailability that's due to state of charge constraints. Okay, one last one here for day-ahead market enhancements related to available capacity, D5. We'll do charts that quantify how often resources have a real-time upper limit that does not support the day-ahead awards, energy, imbalance reserve, reliability capacity. And then what would the penalty have been if the resource had been charged a real-time flexible ramping up price for unprovided capacity? Let's see, and that's related to, so there's going to be for 5 minutes, so flex ramping product is 5-minute rampable capacity, if you recall, and the imbalance reserve product is 30-minute rampable capacity. But I think the 5-minute rampable capacity from these imbalance reserves, that will be resettled. That'll have a settlement in real time at the flex ramp up price, I believe. But the imbalance reserve product, the other IRU capacity up to that's 30-minute rampable, that just gets a no pay if it's not available in real time. So I think there was some policy questions about around that. So we'll be putting out some metrics about what would the penalty have been for that capacity that's just subject to no pay versus having to pay the flex ramping up price for capacity that ends up not being provided, like through a D rate. Okay, so now moving on to, again, our subcategory now for these day-ahead market metrics, balancing area actions. We'll be producing charts on the use of load biasing by balancing area in the residual unit commitment, the hour market, the 50-minute market. I think one of the major drivers of having a product in the day ahead to reduce, to deal with uncertainties, could it potentially impact balancing areas use of load bias. So we'll produce charts on that. D7, we're getting to metrics on day-ahead market enhancements, market behavior. So we're doing charts that analyze the day-ahead market energy bidding behavior before and after the implementation of imbalance reserve product, and imbalance reserve bidding behavior as a function of conditions, right, such as the requirement, right, the uncertainty level, and imbalance reserve product prices. We'll be analyzing real-time energy bids of resources that receive the IRP awards. So you can look at are they adjusting bids or changing bids in real time after receiving these IRP awards. Moving on to metrics, day-ahead market enhancement metrics related to market power mitigation, D8. Looking at the frequency of constraints that are deemed competitive and non-competitive in the different scenarios, right? So just the IFM energy scenario, but then which constraints are deemed competitive, non-competitive in the upward and downward imbalance reserve product deployment scenarios. And then also be looking at, right, doing comparisons to the constraints that are deemed competitive or non-competitive in the residual unit commitments market power mitigation run. D9 is again related to MPM, market power mitigation. Be quantifying imbalance reserve product and RUC bids that would be subject to potential mitigation, right? Because the trigger for looking at, for considering whether or not a resource will be subject to mitigation is if the non-competitive congestion component is greater than 0. So we'll be looking at, and quantifying which resources would be potentially subject to mitigation. And then we'll also be attempting to quantify the subset of these that bid above, that had their IRP and RUC bids, right? Bids above the competitive LMP. And so that would be a way of looking at which of those bids may potentially have been lowered due to mitigation. And again, at go live, there won't be, my current understanding of the implementation is that there won't actually be effective mitigation for imbalance reserve product and RUC because the bid caps will be set. The devs, effectively, the devs will be set at the bid caps, is my understanding. And so I think ISO is going to implement. I think ISO is planning on implementing, the market power mitigation, so that we can do analysis like this. But in effect, no bids will be mitigated because the default energy bids will be, up at the bid cap. Okay. Let me just finish going through these data market enhancements ones, and then we'll stop for questions. D10 is related to net load uncertainty. We'll be comparing the data market modeled distribution of net load uncertainty to the distribution of the actually realized net load uncertainty in the 50-minute market and the real-time market. And we'll include both the quantity and we'll make attempts at looking at both the quantity and the location of this comparison in our analysis, right, of the day-ahead model distribution compared to the actual realized distribution of net load uncertainty. Now the last 4 here for DAME are related to prices and costs, how we're categorizing the metric type. The D11 we'll be analyzing the frequency of imbalance reserve product and reliability capacity price caps binding. D12 we'll be producing charts looking at comparing average constraint prices in the IFM deployment scenarios to the 50-minute market and RTD shadow prices of those transmission constraints. And we'll include comparison of how frequently the constraints are binding. D13 will be charts on imbalance reserve product prices versus flexible ramping product prices, the net revenues at a resource level. And we'll also break out intervals when the flexible ramping product prices are higher than the day-ahead market imbalance reserve product cap. And again, I think that has to do with the potential concern of for that 5-minute rampable capacity, right, that's awarded in imbalance reserve product that could potentially get having to be bought back at flexible ramping product prices. So I think there was some question about looking particularly at those scenarios, those flexible ramping product prices may be higher than the day-ahead market imbalance reserve product cap. And finally, D14 here will be metrics on quantifying procurement costs, overall kind of, putting out metrics quantifying the overall procurement cost of imbalance reserve product and reliability capacity. And we may make an attempt to kind of compare the RUC costs prior to EDAM, but obviously have a limited applicability as we get further away from the start of EDAM. All right, with that, let's stop for some questions. We're gonna move on to EDAM metrics. We got some in the chat. Let's go to the phone lines first.
Okay, we have some questions on the phone. First caller, you're unmuted.
Medicine. A couple things. Just one thing, kind of in general. Are you going to be looking and seeing whether the binding constraints are the same for energy and IRP?
Yeah. So yeah. Which one that is?
I didn't
yeah,
see it in there. Yeah, because the part of the configurable parameter stuff for the IRP is that it is choosing the set of constraints, but may be different. The other thing is when in D0, when you're looking at the energy IRU, I think you also need to include AS in that. And the same is for D14, where you're looking at the prices and costs. I think you would also want to look at the AS costs, especially. I mean, I realize it's only for the CAISO, but that's potentially one of the concerns, especially that comes out of some of that's the price formation enhancements, where they're looking at some kind of potentially scarcity pricing. But one of the things here is that the CAISO is the only one where it's also procuring AS. So, depending on what happens with the IRP, if that's increasing the AS cost for the CAISO, that's something that should be looked at.
Absolutely. And again, please be sure to put this stuff in writing too. Email that to us. We have a record of it. Awesome. Yeah. Well, your first question, I think, comparing the constraint binding, I believe that's D12. There's a lot of writing here.
I'm sorry. There's been so much going on lately. I haven't had a chance to look at these in detail. The other thing that I had is for D11. When you're looking at the IRP price caps binding, I think you also need to look at when the IRP demand curve is binding, because it.
Right. Yeah, and I think exactly. I think when thinking. Yeah, absolutely.
Okay. All right. Those are the ones that I had at this point. Thank you.
Yeah. Okay. All right. Thanks a lot.
All right, our next caller, you're now unmuted.
With WPTF, can you hear me okay?
I can hear you.
Okay, great. Just a couple really quick questions. So I think on D1, so I think as was just previously mentioned, that in that day ahead configurable parameters, one of the things they're looking at is which constraints to enforce. If they end up enforcing all constraints on day one, will you guys just at least report out, we're not doing this metric because of that? Because I'm assuming the way I read this is you're only going to report on it if the CAISO is not enforcing all constraints in the deployment scenarios.
So what your question again is saying if they are enforcing all constraints?
If on day one they end up enforcing all the constraints in the IRP deployment, will you just kind of note in this report that you're not reporting on that metric because of that reason?
That'd be fair. Yeah, that's a fair point. Yeah.
Okay. Yeah, because I just want to make sure. I guess where I'm going is making sure that D1 isn't inadvertently going to capture instances where they are enforcing it in the deployment scenarios, but it's not binding, and then it becomes binding in real time, because I think you guys capture that in another metric.
Yeah. Okay.
Cool. Then the other one, just real quick, you had a couple on, I think, bidding behavior and market power mitigation. And I know previously you said some of these metrics won't be publicly posted, but is there a way to aggregate that data to where you can in some way post some reports on this? I think it's
absolutely.
D7 through D9.
Yeah, absolutely. Yeah, I mean, put that in writing. Send us an email about which ones you think would be particularly useful. Yeah, like I said, kind of in the beginning of the call, some of these, we can find ways to aggregate them up in a way that would not be confidential if people would find that useful.
Yeah, no, that would be great, especially because a lot of these were policy questions as well. So, okay. Yep. And then my last question on D10, Are you guys trying to get at, I think what you're trying to get at is trying to see if the way the uncertainty is estimated in the deployment scenarios aligns with reality. And if I'm reading that correctly, will you guys also include something similar for the wind and solar uncertainty? Because I think that feeds into the IR requirement as well. Or is there a reason why we're just looking at net load uncertainty?
Yeah, I believe we have it in here somewhere. Looking particularly at the verse.
Oh, did I miss it? Sorry.
No, I mean, that may be under EDAM. I think, no, you know, that's under, yeah, we'll get there. I think that's under EDAM metrics.
Okay, great. All right, that's all I
Yeah.
had. Thanks.
Awesome, thanks. Okay. I'm not seeing anything else in the chat. I'll keep moving along then. Okay, so we have 30 some numbered EDAM metrics here, so I'll try to plow through these. The first set of these are related to the product area, are related to congestion rent allocation. So E1, we're looking at trends in contract reference number submissions that qualify schedules in one balancing area for congestion rent on another balancing area's constraints. And we'll break out by whether, right, those OAT rights which qualify for the congestion rent, whether those are new versus existing or rolled over, and that include us monitoring for wash trades that may counterflow the qualifying contract reference number submissions. E2, we're doing metrics on trends in self-scheduling versus economic bids. And we'll break that out by whether or not the schedules would qualify for the cross-balancing area congestion allocation, right? Because they're firm point-to-point or NITS rights. If the schedule is generation, load, import, export. Okay, so moving on to, again, sticking with E3 here, congestion rent allocation, but our metric type here, now we're getting into market results. We'll produce charts on the average impact of each constraint's shadow prices on all EDAM load aggregation point prices. E4, again, sticking with market results, we'll be producing graphs on trends in the binding constraints in all balancing areas, including shadow prices and flow limits. We'll break out the estimate of flows over each constraint by injection or withdrawal, source balancing area, and by if it's self-schedules that are eligible or ineligible for the cross-balancing area rent allocation, or if they're economic bids. See the last set of metrics on congestion allocation, again, related to market results. Will just be kind of the general trends in congestion rent allocation. This is kind of a long statement here, but it's kind of just breaking out the congestion rent and the different BAs from all the different categories we could think of breaking it up by. So such as congestion rent allocated to BA1 from schedules in BA2 that create parallel flows on BA1's paths. We'll break it out by congestion rent on, say BA1's paths that are allocated to other balancing areas. We'll include quantification of the congestion rent on the balancing area's paths from schedules within its own balancing area. We'll break out the proportions of these congestion rents from self-schedules eligible for cross-balancing area allocation, self-schedules ineligible, right, for that cross-BA rent allocation, and economic bids. All right, E6 now, looking at, so we'll have some metrics on gas nomograms that balancing areas will be able to implement. These are constraints that are that a balancing area can implement to limit the total amount of generation from a set of gas generators, where the limits are based on the total amount of gas that the set of generators can burn. So we're looking at trends in gas nomogram usage and results, including the frequency that the nomograms are binding, the shadow prices, the price impacts, and estimates of the reduction in available capacity to the market due to these gas nomograms being implemented. We're monitoring for how these are used in tighter conditions, right, if they're used in place of generator D rates, and how they are ultimately treated, implemented as being treated in the resource efficiency evaluations. All right, starting with E7, we have a series of metrics related to greenhouse gas. First subcategory metric type is the GHG export constraint, right? That's the constraint that limits the amount of power that can be attributed as going to a greenhouse gas area from a non-greenhouse gas BA, and it limits it by, let's see, the difference in net exports flowing out of that BA between the GHG reference pass and the market results, right, the binding results, although it's actually, I think, for the second part, I think ISO plans to start off, I believe, with a kind of a pass of the market right before the kind of the final binding market results. But yeah, it's intended to limit the attribution of a BA to the difference between the net exports out of the area in the GHG reference pass compared to kind of what the final flows out of that net exports out of that balancing area end up being in the day-ahead market. So we're looking at for E7 overall, let's see, trends in that GHG export constraint, including the frequency that constraints binding, what those limits end up being, right, the difference between the reference pass and the flows out, shadow prices by balancing area. We'll quantify the extent to which each balancing area's limit is based on a reduction in net imports or an increase in net exports relative to the GHG reference pass. I think that's a question for us, how the ISO is actually going to end up implementing that. Check on that. E8, we're getting into, again, GHG market behavior. We'll be comparing bidding behavior of resources in greenhouse gas areas to resources in non-greenhouse gas areas. We'll break that out by resource type. Continuing with GHG market behavior. E9, we're comparing day-ahead market energy bids to real-time energy bids, right, for non-GHG area resources, and those are the ones that receive GHG attributions. We'll be emphasizing low emissions resources. We'll also emphasize resources with real-time energy and GHG attributions that are in excess of their day-ahead energy and GHG attributions. And this is something that the MSC talked about quite a bit in their opinion. So this is to assess the possibility of low emission resources strategically bidding above the marginal cost in IFM in order to decrease their dispatch and that IFM GHG reference pass in order to increase the potential GHG attribution in IFM or real time. E10, now we're getting on to GHG. These are grouped as kind of market results type metrics, starting with E10. Quantify the frequency and magnitude of the various binding constraints that limit the GHG attribution to resources in a non-GHG area. And I'm not talking about transmission constraints here. We're talking about, right, what can limit the attribution, the specific constraints like the amount that the resource has submitted to the GHG bid megawatt quantity, and also the resource-specific allowable GHG award from the counterfactual run, and that GHG net export constraint that we talked about. E11, continuing with GHG market results, we're doing charts on just general trends in greenhouse gas market results, including the greenhouse gas constraint shadow prices, quantities being delivered. We'll break it out by source BA and resource type, and we'll be comparing day-ahead market and real-time prices and quantities. All right, let me keep going through. We have a ton of metrics on the resource sufficiency evaluations. Let me try to get through all the ones before that, and then we'll maybe stop for some questions. E12 and E13 have to do with the EDM net export constraint, right? Not the GHG constraint, but the constraint that each BA can set up to limit the amount of net EDM transfers out of their area. So the first metric, the first type is BA actions. So looking at trends in the net export constraint settings by balancing area. We'll break it out, show hourly trends, but also, monthly, quarterly. We'll analyze that as a function of market parameters, such as load at the BA and system level, prices, and the imports that may be in the BA, variable energy resources, transfer capability, and BA competitiveness, where we'll use a metric like RSI. But again, the point of that is just we'll be looking for correlations and how that net export constraint is set based on things that may cause the BA to set that at different levels. E13. Market results for net export constraint, producing charts on the trends in the net export constraint shadow prices and impacts on energy and inbound reserve product prices. All right, so now these next ones, E14, and I think we have a few more on the next page too. We call them the project area resources. It's kind of a catch-all, so don't read too much into these. But first, market type. BA actions, I'll be looking at trends in out-of-market dispatches, right? Exceptional dispatches in CAISO, out-of-market dispatches in the other balancing areas. Starting E15, looking at participant behavior for resources. So we'll be monitoring participant bidding behavior in EDAM in real time as a function of various market conditions and results such as EDAM awards, resource efficiency evaluation status, and bilateral prices. We're looking for monitoring for participants adjusting bid prices and to what extent they're following dispatch and potentially arbitrage price differences between markets. E16, sticking with resources and market behavior, looking at trends in intertie resources that participate in EDAM, quantifying hourly and seasonal bid quantity, cleared quantity, and the proportion of those awards that end up actually scheduled, those portion of the awards end up ultimately e-tagging. I'll be monitoring for things like correlation with bilateral prices, and we'll be monitoring intertie schedules across balancing areas for circular schedules. You see arbitrage, locational price differences. All right, and finally, before we get to RC metrics, E17, this could probably go in. We also have a set of projects around transmission, so this one could probably go into that. But following resources, transmission access, we're looking at trends in the types of transmission that resources use to participate in EDAM. This is point-to-point firm, NITS, et cetera. And we'll break that out by self-schedule versus economic DIT and resource type. All right, there, let's stop for a second. I think we have about 20 metrics left to go over. Let's stop for questions here.
There are currently no raised hands.
Okay. I'll keep Jim and then she's not able to. Looking at the chat. Oh, it said Dan posted some more stuff. Okay, thanks, Dan. Okay. All right, so now we're starting. So the next whole lot of metrics, a number of metrics that relate to the EDAM resource efficiency evaluation. The first, many of them, we are under the metric type available capacity. So actually, I think the whole next slide is also RSC available capacity, so I'll stop even mentioning that. So E18, I'll be estimating the capacity used to pass the EDAM resource efficiency evaluation. So it's the capacity that's used to pass it that's not available due to transmission constraints. Again, that'll be, again, an estimate we'll be looking at. E19, quantifying resource efficiency evaluation capacity that receives the day and market award, but does not bid or deliver in real time. E20, be quantifying the impact of the ISO's policy to count the VER forecast towards meeting EDAM RC instead of bid in VERs. So we're having charts on the trends in the EDAM VER forecast versus the VERs bid into EDAM. I think that was a concern of the forecast potentially overcounting the VERs that might actually show up. E21, we'll be making charts on just overall, like the more general trends and capacity counted towards passing that EDAM resource efficiency evaluation. So we'll break it out by balancing area. We'll have charts that have, hourly trends for a certain period of time, break it out by month and quarter and by resource type. We'll be looking for correlations in the available capacity and each balancing area's resource efficiency evaluation requirement. And it might also be useful to quantify these things as a function of each resource's PMAX. Okay, sticking with RSC available, the metric typing available capacity, again, lots more of these. E22, we're looking at trends in excess available capacity in adjacent balancing areas. We'll break that out by whether or not the balancing areas failed the EDAM RSC, and we'll be breaking out by whether or not the transmission between the balancing areas is constrained. E23 is focused on imports. So we're looking at trends in the imports that count towards the EDAM RSC, broken out by imports that receive DAM awards and whether or not they bid and ultimately tag in real time. We'll be quantifying the imports that do not tag in time for the WEIM RSC for the short-term unit commitment. Again, there's the policy, there's potential implications for the balancing area if they have imports that don't tag. We'll be monitoring the market participants that don't tag. And another kind of, a concern that we raised, we'll be monitoring and quantifying non-resource specific imports that ultimately tag from an EDAM balancing area. And we'll be, monitoring those participants. E24, look at trends in variable energy resource capacity that gets counted towards the EDM RSC versus what the real-time forecast of those VERs end up being. And we're monitoring for differences based on which entity's forecast is being used, as ISO's forecast or the entity's forecast. I think that kind of gets to maybe Callie's question from earlier, I think. E25 we'll have charts on trends in wheels counted as EDM RSC capacity. So we'll break it up by hour again, right? Month, quarter, source, and sync BA. And we'll be looking at, I think there's a question we had about implementation, right? Which BA has responsibility for non-resource specific wheel that ultimately doesn't tag. E26, we'll have charts quantifying the RSC obligations that are traded between balancing areas. We'll break it out by the buying and selling balancing area, and again, hourly trends, month, quarter trends. E27, look at trends in demand response counted towards the EDM RSC. Quantify its day at market, availability, and look at that. Look at an estimate for how much actually delivered in real time. Okay, I think this is the last page of RSC. E20, it's actually, now we're going on from available capacity. Our subcategory now is market results of the EDM RSC under metric type there, market results instead of available capacity. E28, we're looking at the liquidity at the trade hubs used for the RSC penalties. Right, so if a balancing error fails, the EDM RSC, the penalty will be, the penalty after you get past certain tolerance bands will be based on the prices at bilateral electricity hubs. We're looking at the liquidity there. E29, we're looking at quantifying or estimating EDM energy from potentially unreliable sources, such as virtual bids, variable energy resources. So we're looking at, so there's concern that we raise in policy setting that looking at the EDM energy from virtuals that support EDM transfers. We'll break that out by whether or not the balancing area that received EDM transfers failed the EDM resource efficiency evaluation. E30, again, sticking with RSC market results. We doing charts on trends and outcomes for BAs that fail the EDM RSC. And we'll break it out by if they're subsequently removed from the EDM pool for the WEIM RSC. Let's see, and that's, I believe, if I'm recalling correctly, the balancing area fails the EDM RSC, gets removed if there's ultimately not enough supply in EDM to cure that balancing area's failure. So we're going to quantify the failures, penalties paid. We'll correlate with the tolerance band. And then we'll quantify real-time outcomes, such as real-time resource efficiency evaluation failures, price spikes, power balance constraint violations, energy emergency alerts, right, EEAs, systems energy transfers, and available real-time capacity above load in these areas that have failed the EDM RSC. And then finally, I believe the last one for RSC is E31. We'll be looking at when there are real-time power balance constraint violations in an EDM BA. We're monitoring and evaluating the implemented prioritization of power balance violations relative to EDM transfers into or out of the EDM BA that had a power balance violation. And this is, again, kind of there's been, I think the ISO did clarify it, or at least it looks clarified in their technical implementation about what the prioritization would be for when there's EDM transfers between areas in real and in real time, one of them has a power balance violation. What will be how will the software actually implement? Which BA does not get the power right in the real time solution. So we're just taking a look at that to see how that's implemented. Okay, so I think we have about 9 metrics left, 8 or 9 metrics left. So let's stop for questions there.
Hey, we have one raised hand. Caller, you're unmuted.
Hey, Ryan, Dan again from TEA. So just from the chat stuff, I guess I'll follow up with Milos and maybe John Anders just to check that we're not missing something in the EDAM tariff sections, because I'm only finding reference to transitionary pricing in the EIM section, but then in the business requirement list, there's stuff in there about EDAM transitionary pricing, and then back in the EDAM final proposal, there's some stuff in there. So once we figure out sort of where that lives, then I do still think that'd be something to have either some special reporting on or roll that into a standard metric. A couple other things, though, is just on the, what was this, metrics E15 and E16. Would you also maybe want to include demand bidding behavior in there as well, or just some reporting on like the bidding of demand in an EDAM area versus the demand forecast? Because that kind of gets to E38, E39. You know, we don't have virtuals for EDAM on day one, but you know, bidding demand is in some ways a similar activity.
Absolutely. And
so
actually, we actually have it in there. So our last two, or I think our second last metric, we classified it under virtual bids for product area. But we would monitor.
Oh, I see that. With or without virtual bids, you'd look at load under scheduling. Okay.
Yeah.
On E16, having their monitor intertie schedules across BAs for circular schedules, I kind of get the point there, but I also think it would be good as EDAM gets going for DMM to have some lines of communication with market participants in that area, because without virtuals, without direct congestion allocation, and with some of the questions surrounding the SP tie versus gap tie pricing for intertie schedules, there's an aspect of trying to marry up between the physical bilateral scheduling world that'll exist outside of EDAM and the, say, pricing realities of EDAM that could just lead entities to use a physical path that is different on one day versus another, just based on where they're able to find resources and what they expect pricing to do at different EDAM BA intertie nodes. So I just want to be clear that it's a new market, and how entities engage with it, hopefully has nothing to do with any sort of manipulative market behavior, but may just be trying to figure out how to engage with that market given the really unique pricing and other aspects of EDAM.
Absolutely. Yeah. Noticed. Yeah. No, I think that's fair. I mean, in general, if we do see something of concern, we do reach out to market participants directly. But no, absolutely.
The last thing is just overarching. Like it seems like a lot of these metrics are done at the BA level or proposed to be at the BA level. Do you have any expectation or thought of whether DMM would be able to look at like RSE results between LSEs within a BA, or other things going on sort of at the sub BA level, or is the intent sort of just to stay up at the EDAM entity BA level for each of these?
You're saying you would take it for the RSE?
Yeah, like in PACIs, there'll be, I don't know, 4 or 5 at least LSEs that are all rolling up to meet the PacifiCorp RSE, but each have their own individual RSE.
Okay. Noted. Okay, thank you. And you definitely submit that in writing. That's a good thought. Thank you.
There are probably a couple areas where it is kind of curious whether breaking out some reporting down to the LSE level might be useful in some of these metrics.
Okay. Absolutely. Yeah, and internally absolutely, right? But thank you we'll definitely add that to our list. And just a matter, we have to check to what extent that's confidential or not, breaking it down to individual participant level. Yeah.
Yeah, that makes sense. Thanks, Ryan.
All right, thanks. All right, you know what?
Question?
One more question. Yeah, let's do it.
All right, caller, you're unmuted.
No, Edison. Just on all the RSC things, they all seem to be on the capacity side, but there should be some reporting, I think, also on the requirement side, and maybe you just don't have that because you expect it to come out of the market already. But I'm thinking, like, you know, what is one of the things that concerns me is the impact of the IRP on the RSC calculation.
Okay. Yeah, I think somewhere in here, I mean, yeah, we're obviously going to be reporting generally on the requirements. I think it's in one of these somewhere.
Okay. All right.
Yeah.
Thanks.
Yeah, no, absolutely. Yeah. No, for sure. I mean, that's like kind of the highest level one. It's buried in here somewhere.
All right. Yeah, I didn't see
Okay,
it, but
yeah.
I haven't spent a whole lot of time looking at all of them.
Yep. No, thank you though. Okay. With that, let me just finish. You know, there's 2 more pages left here. Let me try to see if I can, without reading these all. So we're gonna have several like different metrics here on transmission, right? There was a lot of policy on EDM transmission. The E32 is looking specifically at metrics having to do with bucket 2 transmission, right? The availability of that. E33 is more general, right? The trends in transmission capacity availability broken out by bucket, balancing area, hourly, monthly, quarterly, right? The total amount of transfer capacity made available. And we'll attempt to quantify, right, transmission not made available to EDM. That would be kind of pending data availability, and comparing data and real-time transfer capacity that's made available. E34, market behavior related to transmission. So when we look at monitoring transfer capacity that's made available by a VA or transmission customer for actions that may be intended to inflate congestion rate allocation. And then E35, we're looking at trends in real-time congestion and balance offset, like trying to quantify that by constraint for each EDM balancing area and non-EDM WEMBA. Particularly, we're looking at estimating the impact of EDM schedules on the real-time congestion and balance offset for WEMBAs that are not in EDM. And then the last for transmission, E36, market results, general trends in transfer congestion rate allocation. We'll break that out by BA, hourly, monthly, and quarterly. And then the last 3 here, E37, we'll definitely be looking at charts and issues related to transmission revenue recovery, the trends in breaking out by BA, type of foregone transmission sales, et cetera. And finally, E38, E39, related to virtual bidding. We talked about with Dan here. And E38, we're looking at how load is behaving, particular quantifying load under scheduling by balancing area, right, comparing it to forecasts, monitoring for differences between BAs with and without virtual bids. And then finally, E39, virtual bidding monitoring issues. So, you know, look in virtual bidding activity. Virtual bids actually we can look at what profitable virtual bids for. Have they found an issue with modeling between data and real time that can be exploited for profit? So we take a look at that. And before one last round of questions, let me just wrap up here by saying, please you can go to the DMM webpage for more information about DMM. You can also go to ISO Tariff Appendix P. With respect to this metrics catalog, please email comments, feedback to dmm@kaiso.com. The metrics catalog is on the DMM webpage under Special Reports Presentations. In general, for questions about this, anything else related to DMM, you can contact me, Ryan Krolinsky, or Adam Swadley. And our email addresses are down at the bottom there. It's also helpful if you would emailing us, please also CC the general DMM website, dmm@kaiso.com, just in case we get so many emails. Don't want your email to get buried. Someone will always be looking at dmm@kaiso.com. All right, with that, maybe one last round of questions. Ahmed?
Okay, we have one raised hand. Caller, you're unmuted.
Hi, Steve Keene from Edison again. When you're looking at the transmission results and the transfer revenue recovery and that, are you going to be looking at the marginal energy costs and how they differ between the different BAAs?
Yeah,
that's one of the things that's concerning me.
That's a good. Yeah, I know that would go under kind of general pricing. I think I would kind of put that more into market results, one of these other categories above. Yeah, absolutely. Yeah, I mean,
right.
yeah. How differences in kind of, yeah. constraints binding can have influence different prices. Absolutely. Thanks, Steve. Anything else?
Oh,
We are right
there
at
are no
time.
more raised hands. Mhm.
Okay, fantastic. Thanks everyone for listening. And please email us your feedback at dmm@kaiso.com. Thanks everybody. Bye.
This event has concluded. Thank you for using Event Services. You may now disconnect.